Hello, everyone. A very good afternoon to all of you. Myself, Dr. Rakesh Agrawal, Secretary General, Risk Management Association of India, and Editor, Insurance Times. So, welcome you all to our live webinar on impact of COVID on general insurance industry. COVID-19 has severely disrupted the world economy. Earlier, also, pandemics have had significant social and economic impact and cost to humanity. But this pandemic has unparalleled consequences. Since there is lockdown in most part of the country, the general insurance industry is suffering too. So today we have a expert panel to discuss and deliberate on impact of COVID on general insurance industry and the challenges for the sector. Today's session would be moderated by Mr. G. Srinivasan, Director, National Insurance Academy and Advisory Council member, RMAI. So let me just brief you about our association. Risk Management Association is an NGO engaged in promotion of risk management culture in India. The basic objective of our association is to promote awareness about risk management and act as a platform for risk managers, insurance professionals, bankers, corporates who can share their ideas and thoughts for development of the industry. We also encourage research and development in this field and are very soon going to launch some risk management programs also. So here's a list of our governing council members. This organization was started way back in 1992 by Mr. R.J. Agarwala. And we have our Mr. Abhijit Chaturaj, Professor Dr. Chaturaj, who has been there since inception, and Mr. K.L. Naik. We have a strong advisory council team and people from the industry who are quite experienced. We also have few industry experts from different fields. And actually, we have built a knowledge center in our portal where people can access to risk management resources. Then we have got some linked to international bodies, videos, courses. Last year, we published organized this event on risk management challenges in new era. And we published this quarterly bulletin. And here a list of some of our partners. So before please just before I hand over the today's session to Mr. Srinivasan, let me briefly introduce everyone on the panel. We have with us Mr. M.N. Sharma, who is the Secretary General of General Insurance Council. Before joining the General Insurance Council, Mr. Sharma worked as a Chairman cum Managing Director of United India Insurance. He was also the MD and CEO of Health Insurance, Third Party Administrator, the public sector insurance company owned TPA. Then we have Mr. G. Srinivasan, who is the Director of National Insurance Academy, Pune. Mr. Srinivasan has more than 38 years of experience in general insurance field, both in India and abroad. A well-known name in the Indian financial sector. He is one of the longest serving CMD of public sector insurance company. So his last stint was in New India Insurance Company, Mumbai. Mr. Vishweshwari Singh is the Chief Operating Officer of Universal Sompo General Insurance, who has over 21 years of experience in the marketing field, covering financial risk, business relationship, health insurance operations, and risk management. Mr. Sandeep Dadia is the Chief Executive Officer and Principal Officer of Aditya Birla Insurance Brokers. He joined the company in 2011 and has strategically steered the company to being one of the top 5 insurance brokers in the country. He has a total work experience of almost 20 years in the insurance sector. And we will be having question answer session at the end of the session, so you can post the questions then. I think we have lost connection with Mr. Srinivasan. Maybe he'll be joining soon.
I think.
Yeah, please wait till we can reconnect.
Should we start with a question and maybe Sharma sir can take that and we can start the session while he joins us?
No, he's the moderator. Let him be on the. Let him come down. It's better he's there.
So.
Unless it's going to take a long time.
No, that's what my worry was. But anyway, let's
maybe a minute or two is all right. A minute or two will can wait. No problem.
Please wait, Mr. Srinivasan will be joining soon. We have lost link with him.
You may suggest to him to completely leave. And
yeah, he has left and he is rejoining.
Yeah, that's better.
Hello, we will be joining by Mr. Srinivasan very soon. Please just wait. We will be there. He is reconnecting. Hope everyone is doing fine and taking very good care. And maybe the offices would be start to open soon in different cities. So please take a very good care of everyone.
By the way, do we have any participants from abroad?
Yeah, we have participants from Bangladesh and from Nepal and from Saudi also.
Maybe you can give us brief introduction about the participants from outside.
He has joined.
Yeah.
Mrs.
Yeah, I think Mr. Srinivasan has joined.
Okay.
Let me just check. Hello. I think he's trying to log in through mobile. Maybe just we will wait for a few seconds. And we have Mr. Charles from GIC South Africa, Mr. Afjal from Dammam. So we have a lot of international participants.
And there are a few people from Kenya also. They had approached me. I mean,
Yes, yes. So in this COVID times, there are always some technology issues which we face. So this is a part of COVID challenge.
yeah.
I think till now connection with him was very fine. Maybe due to
Yeah, he has joined, I think.
yeah, I think
This
he's
has happened a
joining.
couple of times, but his mic doesn't seem to be getting on. There's some challenge.
Yeah. What use this?
Sir,
Yes, I think Mr. Srinivasan is back.
Yeah.
So
sir.
I think now the issue is over. So now I hand over the session to Mr. Srinivasan to take the things forward. Mr. Srinivasan.
Thank you, sir. Am I audible, sir?
Yeah, you are audible.
So first of all, my compliments to the Risk Management Association of India for organizing this webinar. I am sincerely sorry for the connectivity issue I had. So the subject is a very relevant one, which is the impact of COVID on the general insurance industry. So I have a small presentation. I will just quickly go through that. So we all know that the pandemic has really posed challenges of huge proportions to mankind. It's a huge crisis. Globally, more than 5 million people are infected and almost 340,000 people are dead. The impact has been quite severe on the developed countries like US and Europe, who have faced very serious challenges in terms of number of infections and mortality. There is no vaccine, there's no cure, so most of the countries have really gone for complete or partial lockdown as the only way of dealing with the virus, and that has created a huge economic crisis. It's expected that the global economy will enter into a recession, a deep recession. India has also done a complete lockdown for quite a long time, and now we are gradually opening up. The expectation is Indian economy will also be badly hit, and we will get into a negative GDP growth in the current year. That's the expectation. But hopefully, as the virus gets conquered, Indian economy should pick up in the next financial year. The impact has been very bad on every sector, including insurance. And we all know that the impact has been very severe on migrant labor, MSMEs, the informal sector. Let me now move to the general insurance industry. On the business side, the economic slowdown will naturally hit the premium paying ability of many business organizations. We know, the capital investments position was already, not very great. And we expect that will also get further impacted, impacting the new premium which gets generated. The retail side also, the premium paying ability of retail customers will be impacted. As we know, many have lost their jobs and their salaries have been cut. So insurance premium clearly will see a big impact. Maybe the impact will be more in the first half of the current year. Hopefully the second half things should improve. If you look at portfolio-wise, fire portfolio, we have not seen the impact because there has been a substantial premium increase in the current year, but the actual coverage may not really increase. If you look at the engineering side, as no capital investments are happening, I don't expect engineering business to grow in the current year. Other corporate lines will also face similar challenges. Coming to the retail side, motor, of course, we have seen the month of April was virtually a washout. Only renewals were there. But it is generally expected that the demand for automobile will pick up the later half of the year. That should really compensate. But right now, the motor business is facing a serious challenge. There is one business which is positive, which is health. We expect retail health to grow. The government has also made it kind of compulsory for companies who are restarting to go for a group health insurance. So that should really give a push to the health insurance side. We also expect demand for new covers, especially pandemic extensions like business interruption, ALOP, DSU on a standalone basis. And probably people would go for pandemic extensions and liability policies, even cancellations, if the premium is reasonable. On the claims side, we expect health claims will see an increase due to COVID. Of course, it's a general experience of the market that other claims have kind of come down, but that's a very temporary phenomenon. People are postponing their elective treatments and surgeries. But if the number of infections goes up and if private sector gets into the treatment of COVID in a big way, clearly, we can see a spurt in the health claims. And as we see, there is a huge variation in the rates charged by private hospitals. So that's one challenge. The property and motor, we had seen a drop in the month of April and probably in May when the lockdown was in place. But as lockdown was getting lifted, we have seen a spurt in the fire claims as industry is getting restarted. And, restart, the risk is always high. So there is a spurt in the fire claims. Of course, we had the cyclone in West Bengal to add to the woes of the fire portfolio. There could be a spurt in trade credit, workman compensation claims. On the investment side, the stock market has taken a beating, almost 25% drop in equity values. So that could affect the investment income of the insurers, especially those insurers who have investments in equities. Interest rates are coming down. Probably, because of the economic situation, some investments could turn bad. So on the whole, the investment income of the insurers would certainly take a hit in the current year. And that is something, will have an impact on the profitability of the insurers and probably on the solvency. Those companies which are on the margins may have to bring in more capital. That is something, we expect to happen in the course of the current year. On the regulatory side, the regulators have been quite magnanimous in allowing delayed payment of premium and continuous of cover in health and motor third-party covers. For compliance requirements of companies, they have given additional timelines. Regulators will closely monitor financial soundness of insurers. So there has been a lot of demand on the government as well as the regulators for further dilutions. Hopefully, we will discuss in course of this, this webinar. On the reinsurance side, since direct business is going to be impacted, clearly the volume of business of reinsurance will also have the same impact. So I don't expect reinsurers to have a good growth. So they will also be flat. On the claims side, of course, India hasn't faced much claims, but globally, pandemic claims are quite high. It's expected to be in the range of US 40 billion to US 80 billion. And there are estimates saying that it can even cross $100 billion. So that's quite a bit of a loss. The loss is largely in property casualty lines, apart from health and life. So that's a big impact on the reinsurers. Reinsurers may also see silent pandemic covers because of the wording issues. Some of them may not have intended to give the cover, but if the policy wording is wide, they might end up paying those claims. Capital could also become scarce because most of the economies are facing a situation, economic recession situation. So investment returns of reinsurers would also be negatively impacted. So there is an expectation that this could lead to, we are not sure, hardening of rates across the board as far as reinsurance is concerned. So finally, COVID-19 has, something, nobody would have imagined 2 months back we would be in this situation, but it's there, and it's going to be with us for quite some time. So this year, Q1, probably even Q2 could be impacted. Hopefully the Q3, Q4 we should come back and try to compensate to some extent the losses of the first 2 quarters. I think one thing that has happened is the way of working has changed. I think it has changed forever. Digital is going to be, the in thing, and people are going to use more and more digital. So a lot of things which are done personally will become now through technology. Hopefully, as we reach normalcy, insurance sector should bounce back and probably do very well. So these are my initial comments. So I would just like the presentation to be taken out. Let me now get into the panel discussion, and I think Mr. Agarwal has already introduced the panelists. So let me straight away get into the questions. Mr. Sharma, I will come to you first. Just want you to, as somebody who is, in the industry, heading the council as Secretary General, how do you look at the general insurance industry in the coming fiscal year? What challenges and opportunities you look at?
Oh, the new fiscal year has already started. I think you're talking about 2021.
Yeah.
Already, as you pointed out, April is a washout for us. That is 8.33% of the year premium is almost in a very, very bad situation. We are minus 10.59% in terms of growth, a negative growth. That is in spite of a big increase in the fire portfolio by way of 41% growth we had in the fire portfolio. And that's mainly because of the increased rates. We were able to bring some sanity in the market and being able to charge decent rates. And that is why this growth of 41% is appearing. Otherwise, in terms of the number of risks that been properly underwritten, I'm sure there must have been a negative growth even in the fire that way, in terms of the number of risks underwritten. Health, in spite of this fear of COVID-19 and what we are seeing here, in the month of April, we just had about 6.2% growth. I thought here we should have had at least a 20 to 25% growth. I expected to happen, but there's hardly 6.2% growth. Or probably because many people were in the lockdown and then they were confined to their homes. They could not go out, and maybe they could not organize the payment, and maybe they could not approach the insurance companies for taking the insurance policies. But then going forward, I suppose they will be taking these health insurance covers. Many of the people will be prioritizing and then taking the health insurance covers. So in the year 2021, I see a negative growth, and then only positive area can be the health insurance area, where many people may come forward to take the health cover. Motor has been very badly affected in Indian market. I'm talking all about the Indian market only. It is minus 49% in the month of April, as compared to the April 2019. The April 2020, the business is minus 49%, the premium. So that's quite very bad, almost. And then the health, the motor insurance constituted 36.6% in the overall insurance portfolio, and in a portfolio which is largely covered, 36.6%. In such a portfolio, we have 50% minus. So naturally, the motor, the overall premium also would come down. So that is how we ended up with minus 10.59% growth in the month of April. But my expectation for 2021 is even if we can make a flat growth without much growth, even if we are able to show the same premium as we completed in 1920. That is 1,89,302 crores we did in 1920 financial year. Even if we are able to touch that 1,89,000 crores, I think we should be happy about it. That's mainly because the auto industry is in doldrums, has been showing negative trends in the entire last year. And this year, because of the COVID, it is in a very, very bad shape. And property insurance is also, people will be very carefully making a very limited production of things. So naturally, they won't be doing much production, and they may be just about producing enough things to that can sell. No one wants to have a glut in the market. So I expect the property insurance is also to be not so much growing. The cargo, of course, is in a very bad shape, minus 15.5% in the month of April. Minus 15.5% in April is quite a very sad state as compared to 8.7% growth that we had last year. So overall, I see the a very, very negative picture so far as the growth is concerned. And the later half of the year may, in case the vaccine comes in and the vaccine is found successful, and the vaccine we are able to make available to the whole of the world and whole of the country here in India, and possibly there can be some amount of coming back to the normalcy, but that we can possibly see only towards the beginning of the next year. So this particular year, we should be happy even if we can show the same amount of premium as we did in 1920. That's
Right.
all. Yeah.
Thank you, Mr. Sharma. I'll just go to Mr. Singh now. Mr. Singh, I mean, what is your perception of the industry? Mr. Sharma feels it could be flat. Are you more optimistic or more pessimistic? What's your view?
Good afternoon, sir. So, yes, I think Council has published data and we've been all looking at that. We also had luckily a CEO's meet just about day before yesterday, where they discussed the same scenario, and people were a little worried, and the worries were very obvious. One was that the equity part is leading to certain challenges. It's going to really stretch your balance sheet. Some of us feel that the facultative cover of reinsurance is going to come at very difficult terms.
Right.
The growth has been, like my company has seen a lot of COVID-based policy being sold. Now, I really don't have an experience on that. So initially we thought that there's just a storm and the terms and treatment will be kind of capped at a certain point. But somewhere we are seeing private hospitals charging much more than what they are. One of our colleagues from another insurance company was saying that once a patient was admitted in one private hospital, they said, send us 5 lakhs before we start treatment also. These things were worrying us in the sense that, looking at the long term, we don't want to get into a scenario that, the profitability gets concerned. We are, Universal Sompo is not a very large company, and we are generally doing the business in a big way. One is retailing, one is bank assurance, and one is the crop insurance. Luckily for crop, we got a little better terms than what we had got last year from GIC. Luckily, the terms were being fixed on 1st of April and not later than that. So we were able to get fairly good terms for foreign reinsurer also. And those numbers seem a little good for us. However, on the motor side, I think, we saw a dip in the month of April as an organization and as well as an industry as a whole. That could also be because some soft terms were given that they could pay later and get the policy insured. We did try and push that OD is not covered, so you should do that. If we look at the whole gazing ball, and we've been doing that, we have this crisis management committee and we meet on a regular basis to understand what is this year going to go by. We all have little optimism that after the second quarter, things should be back to normal, maybe better, because, people have not invested and once the risk goes away. But if it doesn't happen, then it's going to be a big concern for the industry. Solvency definitely is an issue. You saw that IRDA directive coming in, that now not on quarterly basis, but on monthly basis, you have to send solvency ratio. So they are also worried, especially for companies between 1.6 to, that they might just come below the solvency ratio. Then capital is scarce. So companies investing a lot, some of them might not want to put money into those companies. So these are some challenges that I see. But looking at the whole year ahead and hoping for it, we are optimistic that after the second quarter, things should definitely look up and at least stable. We were only at 1.5% of the market share, so we have not suffered so much. As an organization, we grew by 10% in the first month. We'll grow about 3-4% in this month. Targets seem a little difficult, but we should be on the up. But as an industry, I definitely feel we found a lot of people a little worried. Some public sector CMD like New India and all were worried up because they said our fixed cost is so high that we can't cut that down. And so that's going to lead to a lot more challenges if we don't get the volumes coming, and they have huge volumes that are at stake. So these were my thoughts, sir.
Okay, Dr. Dadia, I come to you now. I mean, as a very large intermediary in the market, I want your perception of the future of the industry and also the intermediaries space for the current year.
So first of all, my comments are slightly biased towards optimism because I'm a born optimist. So I mean, being a born optimist.
As a doctor, do you have a vaccine?
We'll find one within no time. So being a born optimist, we usually are more opportunists in terms of what we should be doing. So having said that, yes, insurance industry is going to be facing challenges, and I see it going down. But I think it's time for people to realize that it's now the fixed cost model for the insurance company which has to shift to a variable cost model.
Right.
So, instead of and rope in more and more of intermediation, and I'm not saying because I'm an intermediary, because I've seen balance sheets of multiple insurance companies across the globe where the fixed cost is bare minimal. And I'll tell you a few of the large insurers I had met, and one of the largest reinsurance companies of the world I met. And they said, I have to increase my staff strength by 4 people when a market cap of that particular function is $500 billion. I have to increase my 4 people, which is not budgeted. I have to go back to the board. So that is a level of, these kind of, so they don't incur more of a fixed cost. So they'll have to, all the insurance companies will have to move towards a variable cost regime. That is one thing. Second thing, they'll have to come out, the industry will have to come out together with some kind of newer solutions. So it is not going to be the same product which is going to be sold now. I mean, of course, the same product, and there'll be plus product which will be added to the market. So use of technology is going to be much higher. And it is not going to be that technology is like, anybody can buy a technology and will be able to start functioning on that technology, because it will have to be mapped to the process of the insurance company as well as the intermediary or the client. So it will be a 3-pronged approach in terms of technology, which is going to be used to service the clients properly. So sales process will be automated, service will be automated, claims will be automated to an extent. The delegation of authority, which a regulator may wish to consider sometime, as to everything is done by the insurance company. So where there can be some kind of a delegation of matrices or some kind of delegation of claims authorities or issuance of policies in future, that will reduce the cost of an insurance company, and with a very small incremental cost to the intermediary who are equipped, the overall savings for the industry is significantly high, and the system will be more and more efficient. I expect the capacities to shrink, and which is going to be a very poor state of affair for the industry. So when the capacity goes down, and India was otherwise offering a very large capacity. So when the treaty capacity sinks, the facultative line is going to be so difficult to obtain in terms of the terms which we can expect. I think premiums are going to harden, and more than hardening of the premium, the client will not have the entire capacity. So a lot of solutions will have to be given on a first class basis, or some kind of limit of losses will have to be put on multiple policies. So overall, from a capacity standpoint, it will be difficult. I see the advent of newer products coming in. So I think industry should open up for looking at parametric solution or index-based solutions. And of course, it's now the time. If it is going to be not now, it's going to be never, because the risk-based approach of pricing a risk, in terms of currently the industry is following industry-based approach. So a good risk and the bad risk are charged the same. So, and I would have done the same thing had I been the reinsurer. But the good risk will be given more discount, and the bad risk will be, in fact, they will see a further increase in the price. So that kind of a risk-based approach will have to come in. That's where I see a huge volume which can be generated by this organization of risk management. So where I see a lot of professionals now getting engaged to give a risk-based solution. Okay. So I think industry, there is a crisis, but I think it's a perfect crisis. And in a perfect crisis, any solution is you find is going to be a perfect solution. So that's going to be a market leader, those who can find that solution.
Okay. So let me go to Sharma, Mr. Sharma. Taking forward from what Dr. Dadi just mentioned, every crisis has a solution. So we have seen the April numbers were bad, and then it will continue to be for some more time. Do you have any? Do you see any opportunities for the industry, to mitigate these losses and to move forward using this crisis?
Yeah, any crisis always throws up certain opportunities, but whether the industry gains by that has to be seen from a different angle. That is, every situation will have some positive impact and some negative impact. Ultimately, it is the net effect is what will leave the impact, the net. So here, of course, as my predecessor was mentioning, it will throw up new opportunities, and then we need to make certain changes in our way of working. All this could possibly lead to generating some new lines of business, or maybe business coming through new products that can happen. But then, will it compensate completely the loss of the other business, traditional businesses? I doubt. Whether the loss of the traditional businesses will all be covered up by this is a moot point. Considering that, and also there are various other areas also, like he was mentioning about the stock market, the assets depleting, and the solvency getting affected very badly, and industry being asked to bring in new capital. All this is going to make a big churning in the industry. There can be a few mergers that may happen, and acquisitions and may happen in the industry. So this is what can possibly be happening going forward.
Okay. Shama, one more question to you. We were, very happy that the losses had come down in the month of April because the industries were not functioning. Motor cars were all parked in the garages. But as the industries are now allowed to restart, we have seen across the country, wherever the factories are getting restarted, there's a spurt in losses. So can the industry do some? This happens because probably the restart protocols are not being followed. Could the industry do some customer education? Ultimately, the losses fall in the industry.
Yes, sir. But then my statistics or my observation reveals that there is not much of an increase in the number of losses. This is a season that is, the summer in India. And in summer, usually we do have a lot of fire claims happening here and there. And this, compared to the previous years, is not very high. It's around the same numbers or maybe slightly less. So this really doesn't worry me much. And so far as the industry precautions that need to be taken, it's effectively a technical job. I'm sure the director technical and the works managers in the plants, each one of them are quite capable of taking proper decisions in their respective companies. So I don't think the industry is required to do any special education about this. Possibly they themselves are aware of, and then they will be taken care of.
Okay. I will move to Mr. Singh now. Mr. Singh, today, we are living in a different, as we call, new normal. All of us are working from home. How the industry has adjusted to this? How do you do risk evaluation, risk assessment? How does the surveyors go and assess losses? Are people working from home or people working at home?
Interesting question, sir. So there were a couple of barometers that we were looking at. One barometer, of course, was whether my business in context to what I was doing last year was on the similar lines or not. For the moment, we didn't see any severe losses even in the month of May. But however, sir, what you have said, one question, how do you, because I have to do a risk base and do a risk inspection, it is very difficult in these times. So I am generally looking at renewing my own policy or maybe following as a co-insurer and hoping that the leader has done enough work on that policy. So those are challenges that exist. Even people like Aditya Birla cannot get a plant inspected by their engineers. Certain times we get the broker also giving us risk inspection report. It's very difficult at these times. So there is a challenge. I am slightly going in the blind. Units are shut, so I might be, we don't see enough of that. Those are definite challenges. But so I was also listening to your earlier question for an opportunity.
Yeah.
And interestingly, we were hearing the regulator also talk about sandbox, and we have some of these guys talking about policies as you use. A concept somebody mentioned in that discussion was, what about sandbox on the tap? Now that sounded like a very, that regulations are brought down to such easier things that is much easier to use, and then put the file work in place and go ahead with the product. It can lead to challenges if you have an irresponsible insurer and he garners the market share and is not able to service that. So those, sometimes the regulator will worry. But days have come where the response time, like I have been pushing my product development team to come with a policy. They start reading words from various companies, and they take a little longer to kind of see the life of that product going out. So dynamism has to improve a lot. I have to keep thinking, innovating from various international countries, get an opportunity and develop something new, because the traditional market is going to shrink for sure, sir. Okay. But India, as you know, penetration levels have been so poor that there is an opportunity if insurance becomes a genuine risk mechanism transfer thing. As we say that the world is facing a difficult situation, risk transfer is the need of the hour. But I think, sir, new things will have to come. I think I was listening to Sandeep also, and he was right. People have to quickly develop things, develop it and get it through the regulator, give it to people and say, use this, you need this. And then people will start saying, okay, and it should be easy. So I saw once, Paytm did this dengue cover. Lot of people just took it trying to see what is it all about. So these toffee kind of products, easy to buy, easily available on the shelf, are the needs of the hour. And that's where industry, I see it going.
Okay.
Over to you, sir.
Okay. Sandeep, this is a question to you. I mean, I'll spend a little more time on the corporate side. I know you have a large corporate business. Yeah. So how did you do the renewals on 1st April? Because, you couldn't do much of risk inspections. Did you use drones? I hear in some countries are using drones as a risk inspection. Or, as I heard from some other intermediaries, people have just renewed their policies as it is. There is not much application of mind. Just status quo is maintained. How did you manage this situation?
So our 1st April renewals were managed much earlier. So the risk inspection and everything was done much earlier prior to March. Okay. So in February, end of March, first week, and we have a team of nearly 4 to 5 risk engineers who are with us in our own company. And otherwise, wherever we can't reach, we use the services of the external risk engineers. So we could do a survey across all. In fact, for us, God has been graceful. So we could renew 100% of our clients. In fact, we added more clients. So God has been graceful in terms of renewing all the clients. And of course, there has been a good growth in the corporate side. Now, what has happened is now corporates are not, they are more and more getting educated and literate about what they are. So, and of course, what we also do is we have a concept called as know your policy. So every time before the corporate is buying a policy, we want them to be aware of what they are buying. In fact, one of our clients has kind of got a cover, and there may be a cover which will be triggered from the pandemic solution. Only one, but unfortunately only one. So, so all of our clients have got nicely renewed. Corporates are basically, I think what is also happening is people have gone for more of, corporates are, instead of a price discovery, they should now go for a terms discovery. Okay. That instead of using the cheapest, which they feel is the best sometimes. So many of the large corporates don't do it that way, but if the SMEs, MSMEs or slightly bigger corporates, they go for the price. We always tell them go for the terms, and of course at the same time see the technical capability, see the technological capability of the insurer or the carrier, see the balance sheet of the insurance company. So the love for the balance sheet has to go up now. The respect for the balance sheet has to go up. Because if insurers, and we've seen across the globe so many times, any of the crises, take it 9/11, take it a Fukushima, take it a tsunami incidents, so many incidences, many insurance companies have filed for bankruptcy.
Okay.
So this is the time to actually know who's the insurer. Of course, reinsurer, most of the times it is GIC, so which is almost like a government which is insuring. But of course, now there will be more highlight on what is their retrocession program, what is going to be the program for insurance, reinsurance there, how are their CAT modeling done, what are the catastrophic solutions they have bought. So these are the issues which will now crop up. Multiple questions are coming up now from the insurance side. Of course, we were trying to educate our customers since last 2-3 years, or maybe much earlier. But now is the time we are getting those questions back. And I'm happy that insurance industry is now getting a little more matured than what they were. So, but of course, most of the corporates have maintained a status quo because they don't want to change the insurer at this moment.
Okay.
But as you rightly said, Mr. Srinivasan, I do see a risk of the starting the plant, and that could be catastrophic again for the industry. And somewhere, if the clients have not done their the maintenance of the plant in an effective manner, I think we see a good potential of losses which will come up as and when we start up.
Okay. Sandeep, let me move to retail. I mean, you also do a lot of motor.
Yeah.
So motor, has been very badly.
Yeah, it is.
And, the general expectation is this will continue to be there for some more time. So how do you think the industry can manage this situation? Do you think that pent-up demand will come back and then compensate? Because motor is a large line for the general insurance industry.
Absolutely. And like Mr. Sarma said, it forms nearly 40% of the general insurance industry, and it's a huge top line. I think the premiums have a scope of hardening in motor also, because the insurance companies, if they are making losses, they will harden the premium. Having said that, the motor insurance manufacturing has gone down substantially. Last 2 months, it was almost closed down. Now, post the COVID situation, if it opens up, whether it is going to be a V-shaped recovery or a U-shape or an L-shape, I think it's going to be anybody's guess. And whoever has been able to predict it with accuracy, I think he'll be next to God. So, but having said that, the Chinese phenomenon has shown that there has been a good surge in the demand.
Okay.
My view is slightly different compared to the industry, because I see a huge surge for the second-hand vehicles. Because there will be a demand. People would not want to, at least for next 6 months to 12 months, go in a public transport. They'll be buying new vehicles, or they'll be at least buying a second-hand vehicle if they don't have a vehicle. So there'll be a vacuum created. So there'll be a demand which will come up for the new vehicles also. Whether that demand would be equal to or lesser than pre-COVID scenario, I think that time will prove. But there is a potential that a V-shape or a U-shape recovery may turn out to be positive for it. Industry should concentrate on renewals. Still, in spite of all the efforts, even Supreme Court's directive is there. Still, people don't renew their policies. So I think there is a huge scope for the insurance companies, for the brokers, to use the best of their technological capability to insure the uninsured vehicle. And that's where the potential lies. So there is a volume which can go up in terms of number of policies. Of course, premium may shrink to a bit.
Okay.
So I will just tell you what we came out with is with a very smart solution on the app. So on a single application on the phone, a person can buy a policy, renew the policy for our MISP, which are the motor dealers converted into those intermediaries. They can buy policy, sell policy, renew the policy. They can do complete claim intimation, claim video streaming, everything on a single app. They can see their entire back office. They need not maintain. So it's high time technology like these are developed in the market. And if suppose, if we are allowed to settle the claim in the future through the technological advancement, we see a good upsurge in the claim settlement also, which means that consumer confidence is coming back in terms of claim settlement. So I think we see technology will play a big role in motor industry.
Okay. Thank you, Sandeep. I will go to Mr. Sharma now. Sharma, the investment income, which is a major stay of many of the insurance companies in the market, is going to take a hit. I think that is something, it's very clear. That's going to have an impact on the profitability of the insurers. So how can this be managed? You already mentioned that, some solvency pressure could be there. There could be some mergers. But do you see a pressure on the rates? Will the insurers now focus on underwriting profitability, better underwriting?
Yeah, because all along the investment income, the profits earned through the investment portfolio used to support the underwriting losses. Whatever shortcomings were there, whatever shortfall was there, that will get built up through this. But now this portfolio itself doing very badly, both in terms of the fall of interest rates and also the fall of the stock market. There's bound to be pressure on the various portfolios. Each portfolio has to now forget the support from the investment income. It has to be profitable also. So that requires improvement in the rating. So that is where I believe sensible insurers will not be able to grant any further discounts. In fact, they need to correct their rates and charge properly. but there are always some disruptors in the market, and who can spoil and try to go for the top line. But I think at least in this year, an year where the whole world is affected by the pandemics, and also because reinsurers would not like to have losses, there may be pressure on every insurer not to undercut the rates, and there may be some sense prevailing among them in charging proper rates.
Mr. Singh, I mean, as an insurer, would you be charging adequate rates? That's what Sharma was mentioning. That's one part of the question. The other part of the question is, I thought I'll come to the technology side. Digital today is playing a very important role. So how do you think the insurance industry can really, leverage technology in the coming days? I mean, these are two questions to you.
So what you talked about investment income is absolutely true. When we see global investment income, India has been very fortunate to have got such amazing returns, as what we call them. However, as the returns get challenged, lines have to be profitable. We were a company which came into existence in 2008, sir. So we did not get the advantage of this very brilliant rate that occurred and very strong books, because 2002 companies really did have some savings that came because even with the overriding commissions and things, they made serious monies. So we have been fortunately declaring underwriting profit for the last 2 years, sir. And even this year, unaudited balance sheet, I have a small underwriting profit. So we are very prudent in that sense. But our motor portfolio, and we have this TP commitment, does challenge us a bit. We are unable to get very good rates and very good business on those ones. This year, when we were looking at a business plan, we started doing corporate in a reasonably aggressive manner, and we have been building a book. So those lines will go up for us. So we as an organization feel, sir, one person comes, IIB rates have been agreed by the whole industry, but you suddenly find somebody saying they have gone below this rate. Now you don't know who's really gone, because it's on the net capacity. So they have said that there's no IIB rate, I'm going to quote below that. It's a challenge that we face every day. Some of it is bluffing on the part of the client. And sometimes, it's like, if I blink, I've lost this deal. So I do sometimes, say, oh, okay, as long as it's not going to get reported, if you're undercutting a bit, go ahead, But it is very dangerous. And I agree with you, sir, that if you do not worry about your books in all lines of businesses, if medical, health do not stand independently on its own, it won't make sense. So we really believe in that, and we would do that. On the digital side, sir, very interestingly, I think a lot has happened. We have some companies setting up technology center. My foreign promoter is from Japan. It was coming to India, to Bangalore, to set up a testing center. They were looking at places where they could do product testing through using technology solutions and things like that. I think, we have these companies which have come, which are only digital-based, technology-based companies. Claim settlement, when we look abroad, we have drones coming and settling claim. I think those are realities. We have applied certain things like artificial intelligence and claims, some blockchain technology has been brought in. Policy renewal, WhatsApp, sending the policy by WhatsApp. All those are very basics. All of us have done it. We are really, today, sir, my whole back office is in a place called Mahape, which is a complete red zone. My guys have not gone to office for a single day, and I have 100% policy issues within a day, because they set up that VPN network and everybody works late into the night. Policies are getting, network gets challenged. Like sometimes we have on this buffering, we have periods where there's not happening. So people have night shifts they're doing, but I have nearly 100% policy issuance, sir. My claim settlement has also got up because some physical files, large claims, we are not able to visit. I've still got a couple of large claims from Odisha cyclone. So those are getting pushed. But technology has gone a very far way, sir. Like working from home seems like, we could get into that American concept that till Thursday you come to office, you want to take a Friday off and 3 days and 1 day work from home. Like abroad, people have dedicated rooms from where they work from home. Those seem to be a reality. I think technology has come very far. Chat boxes are working. People are getting information online. Policies are getting issued. And I think that has already become a reality, sir. Some of these people are way ahead, but I think the whole industry will have to fall in line with that, sir.
Yeah. Thank you. Sandeep, I'll devote some more time on the same subject. Do you think the Indian insurance industry has really leveraged technology fully, or is there further scope? Follow-up question is, do you find using technology difficult in terms of marketing? Because Indian insurance has always been a personal marketing. Do you see a challenge in that?
Initially, 4 years back, we used to feel that way, but now, in fact, in the next 2 months, we are launching our virtual consultant, which means a person need not even visit. He can just talk to the person on the VC, and over the VC, he can give all the covers. The customer will be given, a login into a system. That system will throw what are the covers his industry requires, what are the covers he has bought, which he can scan through the OCR technology, and the gap analysis will be given to him in just 5 minutes, not even 5 minutes, it will be few seconds. So, and also there is going to be a benchmarking of the industry, which will be doing across all the covers. It will also pick up the industry-wide risk in a particular industry. So, say, for example, we are dealing with the automobile industry.
Right.
The system will throw specific risk for the automobile industry. So, in fact, we have built in a lot of AI and artificial intelligence and machine learning tools in a virtual consultant. I think in the next 2 months, we'll be out with nearly 30 plus products in the market, and many such things which we are doing. I'll tell you also on the employee benefit side, we service nearly 7,000 endorsements every month. 7,000 a month for a broker is huge. We issue nearly average of 17,000 insurance contracts every day. Everything is seamless. In fact, in last 2 months, on a commercial, retail is fine. It is managed between us and the insurance company. On the commercial line side, a complete handholding on every claim. And we've settled the largest claim in last 2 months is nearly 32 crores, which is settled by a public sector unit, one of the smartest public sector unit I respect. 32 crore worth of claim, another claim of nearly 14 crores settled. So, and likewise, large claims are being settled because of the use of technology. We have made a complete integrated platform. So if the insurance company wants to log into our system, the client is logged in on the other side, we are on the other. So broker provides the entire platform, and insurance companies, surveyor, loss adjuster, risk management personnel, as well as the client, all are on the same platform. Entire loop can be done by visiting only once to the client, right from the risk management report to the capacity, to the rates, to the codes, to the gap analysis, to the claims, to endorsement, everything on a single system. It's taken us nearly 8 years, and our spend is, we have invested a lot of money into technology. So I think it's paying off.
Right. Thank you. Thank you. I'll come to Mr. Sharma now. See, let me ask you a slightly, difficult question. This 30 days non-occupancy clause, the industry took a stand that, this is not allowed. And then later, of course, the council came and gave a dispensation for some time. So there was a perception that industry was a little tough, not really, understanding, empathetic towards the customers. So would you like to clarify? Because,
not exactly, sir. What has happened was that we waited for the 30 days to be completed. 25th March onwards, the lockdown started. So we had time till about 25th April to see whether the 30 days happens. So before 25th April came in, we have announced that, yes, this 30 days non-occupancy will not be insisted on, and there will be relaxation for the lockdown period, for the duration of the lockdown period. So that's how it is. Initially, we expected the lockdown to continue till May 3rd. So we said until May 3rd, but it automatically goes beyond that. So long as lockdown is declared during the entire lockdown period, we will not be insisting on this. We will not be implementing this.
Okay. So right now, wherever there's a lockdown, this clause will not be insisted upon.
Yes.
Okay. Good to hear that. Mr. Singh, I will come to you. I just want to focus a little bit on health. Health, as we know, is a very promising portfolio, especially in the COVID scenario. But there's a feeling the industry has not been able to really capitalize on the, on the kind of eagerness of people to take health insurance policies. Is there anything the industry should do quickly to, otherwise people will forget. If COVID goes, people will forget.
True, sir. I think, the growth has not been that amazing.
Yeah.
As an organization ourselves, we saw most traction happening in the group health side and not so much on the individual health side. Certain companies came with a COVID-based product also, but I think the takeoff was not there. Arogya Sanjeevani, which which IIT was so excited about, which is a simple entry-level product, which has no unique feature. For some of us, has not taken off the way we had expected it to. Maybe, sir, what has happened in the industry, I think, when I sit in my board meeting and every other discussion that happens, the biggest idea they say is individual health has to go up as a distribution channel. Sometimes, we get larger premiums from easier places, so we start focusing on that and we lose how to do that. But as an industry, sir, I think everybody is, and you are right, when we saw cyclones or earthquake, a lot of people take housing insurance and then they forget about it. So we should get back together. Maybe enough has not been done. But sir, I think that the industry feels, I was just seeing what our company was trying to do. We were trying to get certain specific product. We were trying to get those products available, trying to do some kind of advertising also so that it supports the distribution. But it did not lead to such great numbers on the individual side. Group health, the number of proposals have gone up drastically, sir. And we have picked up, for my company, we have picked up substantial number of premium in the month of May, which are health policies, especially group health, especially COVID group health policies also, we've got large numbers. But individual side, not that much has happened for us as such. And we see that trend also with the industry as such that, that distribution has not happened. So that's a challenge. And I think we need to get our act together maybe more quickly on that one, sir.
Okay, just a question. This is from the audience. So this is attendees. How do you deal with the cyber risk? You are now, technology is playing a very big role. Is the industry exposed to cyber attacks? How do you handle that?
So fortunately, nothing has happened, but we also have a cyber policy and I get my books audited. The challenges were that we had to really think about it. When I was getting my audit done, I had to send.
Okay.
He has dropped.
Okay, I think.
Yeah, he has dropped.
So I think I'll leave the question. When he rejoins, he can complete it. I'll come to Mr. Dr. Dadia. Do you think, every sector like the banking sector has come with moratorium, given a lot of relaxations. So do you want anything for the customers? You have any wish list?
Look, customers, I think, learn to trust. That's the biggest thing, because they have to trust the insurance sector very well. Right. They have to trust that they are being serviced by insurance companies very well. They are serviced by intermediaries very well. Because every time I keep on hearing insurance companies claim nahi de rahe, and my answer to them is I just show them the overall underwriting losses. So if they are not settling the claims, how are their losses? So I think so overall customers should buy, and one biggest message to the customer is the cost of underinsurance is far higher than the premium they would have saved in not taking those.
No, Mr. Dadia, I understand that, but do you want 64 VB dilution, some relaxations?
Yeah, absolutely. In fact, see, 64 VB dilution is a must, because at these times when people are not able to pay the premium,
right?
They are. I think they should be given a larger extension of the premium, at least paid in quarterly premium for the next 1 year, at least relaxation for a year or two. And of course, how do you manage that premium well with the insurance company? But of course, that will be reducing the operating, the float income of the insurance company. So that may be detrimental to their balance sheet. But I think it's need of the hour, because the customer would not buy otherwise. Second thing, they should also buy considering, they must take the right and appropriate covers, like as you mentioned, the advance loss of profit, the loss of profits overall, the fire loss of profit, machinery loss of profit. If they don't buy it, they're sitting on a ticking time bomb.
Right. Okay. So, Mr. Singh, you can continue.
I got disconnected. My apologies. Cyber challenges. So basically what I was trying to say, sir, that, when we were getting an audit done, there was this demand from the auditors that they wanted to move a large number of files to their places. And initially, we were not comfortable doing that. So we had to set certain protocols that they can access some of my network. So cyber challenge is a very big thing, sir. And I think, for all insurance companies, because our data is what is everything. If somebody is able to access my renewal data, there's a challenges of those kind. Cyber attack is a certain challenge by itself. My systems go down, everything is system based. So yes, those are big challenges. We haven't seen we never saw a COVID attack. We haven't seen a major cyber attack. We feel we are ready for that. However, whenever it happens, it's unexpected. We have a DR, of course, like all other companies in another location. We have set up a certain protocol for that. But, I used to attend risk management meeting in my company, and, we used to say fire drill. We used to say, oh, don't waste too much time. But once we saw COVID, sir, we are really getting tested on what we call disaster management. And I think cyber attack is something of those kinds, and it can be very, very crippling as we move our dependency more on the cyber-based and net-based data storages and things like that. So I'm in absolute agreement that that's a fear factor, but we think we are well equipped to handle that at the moment, sir.
Mr. Sharma, this is a question to you. Do you want any stimulus package from the regulator or government on behalf of the insurance industry? I know the council had taken up a lot of things with the regulator. Couple of things you feel are very important.
Basically, it is with the regulator, so we have taken up, and then we sought certain relaxations in terms of submission of the returns, some extra time, and in terms of calculation of the solvency also, we wanted certain relaxations because sudden fall in the stock market. And as far as the stimulus is concerned, it will always be helpful for the companies to get some support from the government of India in terms of for the capital infusion for any of those companies which have fallen short of, but on easy terms. So if that they can grant, it will be very, very helpful. But that individual companies will be approaching the ministry. And on our part, we are writing to we're planning to write to the finance minister to keep the general insurance industry also in mind for the stimulus, because we also need to pump in some capital and to make available funds to us on easy terms.
Okay. Dr. Dadia, I'm coming to you. This is, of course, a question from the attendees. Will the industry be open to pandemic covers? You also spoke about it. Do they have the capacity? If they don't have the capacity, what is the solution for it?
No, currently, I don't think industry will offer pandemic covers. At least there will be an exclusion of COVID, because I don't think anybody can buy a fire policy when the house is on fire. So I think the capacity would have shrunken, and we have talked to certain markets outside India, also certain reinsurance market, certain large capacity providers who are giving the pandemic covers. I don't think there is a solution at this moment. But yes, there are other solutions which are available. So the non-damage business interruption losses, which may be triggered by a cyber attack where there is no physical damage, or there may be other damages which are triggered by any other attacks, a pandemic attack, or some kind of parametric solutions and index-based solutions. So these are the solutions industry should be looking for. And compared to the insurance sector, and we have a good expertise. We've actually in last 2 months we built some fabulous expertise in that. So what we are trying to say is, because it's a complement to the insurance products, it cannot be competing with the insurance product. But these losses will take care of the losses immediately in 15-20 days of the claim happening. So pandemic, I don't think at this moment anybody will offer, because even if they offer, the capacities are very, very small.
Okay. So, Mr. Singh, I'm coming to you. This is a difficult question. You can answer if you want. There have been few losses in April because vehicles were not used and industries were not operating. Will you give refund?
I think, sir, we did get some kind of representation on this. I think, sir, as a company, motor loss ratios you're well aware of, and also you're aware about the TP position that we have. It would be very difficult for us to look at that scenario. There has been some representation from here and there, but sir, I don't think, I think suddenly, if the loss ratios go up, will people give us more premium? No. So I don't think it's a possibility, sir.
May I take this, sir?
Yeah, please. Yeah.
So the refund rules are very, very clear. In case someone surrenders the RC book to the RTA, then only we take it that the vehicle is not in use. Here, the people have been asked to remain at home, but still a lot of people are on the roads, and people have been asked not to move out. But still, we have seen so many vehicles also coming out here and there. So we cannot say for 100% whether a particular vehicle is not used at all during this period. So this cannot be done. And as my predecessor was rightly pointing out, at times when the risk was very high, we haven't charged extra premium in that for that particular period. Similarly, at a time when the risk has gone down a bit, we can't be giving refund.
Okay.
So interestingly, sir, you saw that IRDA clarifying somebody, they were asking for e-permit, one of the insurance companies, whether they were allowed to go out and they were not paying the claim and they were told to pay that. So I agree with sir on this one that, if people go out and use their vehicle and suddenly say, I've not really used it, then we'll have to steal milometers and decide on this one.
Exactly.
Okay.
It's not possible to handle it such micro level.
Okay. Mr. Singh, this is a question to you. How do you handle claims? Because loss assessments have become difficult because of lack of mobility. Surveyors are also not getting enough jobs. So there's a question from probably a surveyor friend as well as from somebody. There is a statement that claims are getting delayed. So is that correct, or how can the industry resolve that?
I wouldn't be in a position to comment for the whole industry as such, so I'll have to limit my answer to how we are handling it. So, sir, by and large, we have paid all surveyor fees, and as an organization, the day this happened. So, firstly, we haven't really seen any profitability hit because of COVID, honestly, as on date, because my April figures were okay. I have had a little bit of underwriting profit, so I have made no such cut, and my numbers have not really gone down that I have to do sudden new things. I don't pay my employee on time, I don't pay my surveyor. I will have a check, sir. If any surveyor is not paid, he will have to be paid immediately. There is nothing like that happening. Survey, sir, of course, was a little challenge. Surveyors would not find it easy. But the biggest challenge now that has come is West Bengal, sir. We are trying to get all the list of surveys ready. We have to start surveying as soon as possible. And also, sir, as a relief measure, when we were dealing with motor dealers, sir, we got a representation from some dealerships that certain claims are under process, but they have got delayed. At least you should pay us some amount. We took a call, sir, and paid, on the basis that if there is 100% of the claim, 50% or whatever as a relief measure, we paid those dealers also, sir, because we realize that they have to be up and running, sir. So as a measure to be responsive, we don't really go about talking about it because it sounds like so petty to say that, I did this or I paid on time, which is my duty as such. But we have, sir, and everything is cleared. We have not delayed on any surveyor. As an industry, in some company, if something like that has happened, I would not be in a position to comment on that, sir.
Dr. Dadia, this is a question. This is a question on the human resource side. So there's a question saying, will there be a freeze on further recruitment in the insurance industry? Because the insurance industry has been recruiting a lot of people in the past. And how does the industry deal with the psychological issues of employees? They're working from home.
Yeah.
There are other concerns. Yeah.
Very good question, actually. So I think, there is going to be a recruitment freeze at least for some time. Profitability is something which everybody will have to concentrate on. So whether retrenchment will happen or not, I don't know. But recruitment freeze, I'm sure it will happen. So, but of course, that all depends from company to company and where they are growing. Second thing is, as I earlier in one of the comments I mentioned that people, at least the insurance company, will have to go for a variable cost model rather than a fixed cost model. So in fact, I will probably not be surprised also if they think of reducing the manpower, but intermediaries will start absorbing those manpowers. So because as soon as the the expensive capital of an insurance company will now be utilized for underwriting rather than paying salaries. So that's the best model I have seen, at least, and I have studied across the globe. So that will be the norm. In terms of the psychological impact, I think a new age engagement tools with the employees will have to be set up. Okay. So like what we did, and I can't comment about the industry, but what we did at ABIBL in Aditya Birla Insurance Brokers, we started having weekly meets and the virtual meets. And on a lighter note, my wife always says, if you lose a job, you'll surely get a job in call center, because last 2 months she's seen me only on a call center. So the quantum of work we have done in last 2 months has been phenomenal, and that keeps the team engaged. So in terms of, we will have to learn the new age, new way of engagement with our people. Work from home is going to be the new norm. We will have to accept it.
Okay.
So yeah, I start building that confidence in the people, and once in a week start meeting your people as and when the lockdown opens up.
Right. Mr. Singh, this is a question to you. This is again relating to digital. How does the industry take care of the data privacy? Because as an industry, we collect a lot of data. There's a concern, is the industry able to protect the privacy of data?
So as an organization, we have very similar concern. If my data is leaked, there is data privacy also, but my clients get attacked at the same time. So, we do take a lot of steps. Like my PR register, I do not send from one zone's PR register to the other. I try and isolate it, but it is available with some people. I don't allow people to take, a drive. I don't allow them to shift data. But it's a reality that some data does get moved around here and there. It's a major concern, and we have a lot of actionable guidelines on that. So no data stored can be done. We don't allow PR registers except to be told sent to certain identified people. We don't have the whole data available. We spike it off and send it to certain amount of people. Yet some misuses have been there here and there, sir, and it is a concern for us also, sir. You would be aware that if somebody gets my ready-made data, he's going to start targeting my clients in a bigger way, and call centers are so actively doing that these days. So it is something that we try and protect to the best of our ability. And sir, there's so many norms on that, sir. Yet sometimes some amount of data might find its way out of our company. Right. That is.
Thank you. There have been quite a large number of questions. So I've been picking up some of those questions. I didn't get into very micro questions. Some of them may not be fair for me to even ask you. There is one general question which is to Mr. Sharma. Health insurance rates have always been a challenge, the hospital rates. And especially we are seeing in the COVID situation, the rates vary. Of course, some states have now gone ahead and standardized rates. Could the council, on behalf of all the insurers, negotiate rates with hospitals? This is a question.
Actually, council has not done it earlier, and if that is interested to the council will happily take it up, and then we'll do that. We'll do its best. Who has been doing that all along was the GIPSA company, GIPSA, that is General Insurance Public Sector Association, and the same rates were being followed by others also as the reasonable rates. So we have recently asked the GIPSA companies to think in terms of getting together and then standardizing these rates. So they are on the job. They are trying to meet and then trying to decide on this. But then much depends upon whether the hospitals also come forward and then agree to these rates being suggested by us. Everyone, it is a human nature. Everyone wants to make use of the situation and try to make hay when the sun is shining. So some of the private hospitals are doing that. So we hope some governmental intervention, if it happens and a directive comes, it will be more useful. But on the part of the GIPSA companies, they are planning to getting together and then negotiate rates.
Okay, so this is to Mr. Singh. The biggest problem with the insurance industry in India is it's very elitist. So when will it go to the masses?
So, the way we see it is that it's a price factor, but elitist is a little confusing here, sir.
No, so they are saying that industry is more focused about big customers, not worried about the common man. So, I mean, there is some truth in it. How do we handle that?
No, sir. So what I was trying to say is, you have seen some government mass schemes coming, which are to cater to a certain amount of people. I think the question would be that they don't get a good enough treatment. They are not addressed, and the grievance redressal they are not taken that seriously. I was an organization, sir, who did a fair amount of crop insurance, and we went down to the rural masses. I spent so much time in some part of rural India, and you did see the tough conditions that were there. As an organization, sir, there is if I get I'm the chief grievance officer of this company also. If I get any mail that is addressed to us, we try, and sometimes we get standard stuff. Like, sir, we had an IOB health policy. It was a very low-rise policy, and I was giving it to all my customer base. I was losing money like crazy for 2-3 years in a row, so we had to do some price correction. And then when we did a little bit of price correction, we had people saying, you suddenly hiked up this price. I have been a loyal customer. I have not taken a claim. So some people got disadvantaged. But as an organization, there is a certain service issue that we try and bring it down to that level. That service is decent and given to all the people. Some products should be bought in the market for people at, ground level. In the sense, I think the Sanjeevani Arogya is such a policy which will help in inducting people. It doesn't have too many, asterisk and commas to confuse people. It can be sold in a way and accepted by the masses. So I think those things that have come should hopefully address some of that issue, sir. Maybe what is the need is being felt in more products which are, like first loss basis policy or simpler policies where people can take, and claim settlement is also prompt. I think that need is being felt by us also, sir. And we would like to, like, so I do VLE in a very big way, and I try and increase as much business as I can through that channel. I assume all of that is rural India and very important in that sense. So we are trying, but I wouldn't, sir, I think you should try and answer this maybe better.
No, I mean, as practitioners, I think I wanted to pose this question to you, but that I think is something that all the stakeholders.
Mr. Srinivasan, I would like to take this question and to add something more than what Mr. Singh also said.
Yeah.
So in fact, nearly 2,500 of our MISP dealers are in rural India. They are in the interiors of every part of the country. And that's a large number, issuing nearly 5,000 to 6,000 policies a day. So that's not a small number. So rural India is now being tapped. We are waiting for, some kind of an allowance where we are allowed to cross-sell. Currently, we are not allowed, so we are not doing it. The moment the cross-sell happens on those data which we possess, there is a huge penetration which can take place across all those customers. So currently, we are also bound because the regulation does not allow that cross-sell. If that happens, there is a good reach to every consumer who can buy the right product, to every insurance company who can get the right kind of premiums. And the customer will get the service through the technology platform. So I think there is a huge reach, and the infrastructure is ready. Point of sale as a concept which has started, and we as a company, we've just begun there, and we are nearly around 2,000-3,000 agents. The moment these agents comes to 50,000 agents doing only 10-20 policies in a month, the reach in India is going to be super high. So that is the time when, we have multiple intermediation like MISPs and POS and otherwise. A unified intermediary, something like a sub-broking, when it is allowed, it will reach the masses very fast. This is my purely my.
Okay. So with that optimism, I think I come to the end of questioning, Mr. Rakesh.
Yeah. So I think we had a very lively session and discussed a lot of issues impacting general insurance industry. Issues are unending, so it will take a lot of time to take all issues. Maybe we can cover it in our future events. Thanks to Mr. Srinivasan for excellent moderation and raising pertinent issues. And I'd also like to thank Mr. Sharma, Mr. Singh, Dr. Daria for agreeing to be the part of a panel at a very short notice and very lucidly dealing with all the issues. So I'd also like to thank all participants for joining and raising pertinent questions. And I can see we still have around 326 live participants.
Yeah.
So that is a very good number. So again, a lot of thanks to everyone for joining the session, to our panel members for sharing their views and giving a roadmap about the industry that would be in the future. So thanks everyone. And I think we would be again coming with such similar session in future also. So thank you all.
Thank you.
And thanks all panelists for joining.
Thank you, sir. Thank you so much.
Thank you.
It was a pleasure having you.
Thank you.
Thank you, sir.
Thank you.